The hawkish speech by Jerome Powell dampened sentiment on Wall Street as expected. The benchmark stock indexes went down, but not crashed, which is a good news. Bad news is that Jerome Powell is testifying for the second day, and his speech is complemented with a red-hot employment data. InstaForex analysts will guide you through the maze of events. The major stock indexes tumbled after Fed Chairman Jerome Powell said that the central bank would have to raise interest rates higher than anticipated. The Dow Jones looked the heaviest losses. The blue chips index sank by 574 points, or 1.7%. The Nasdaq dropped by 1.25%. The S&P fell by 1.53% to close at 3,986 points. All of them remained resilient in the New York pre-market. Futures on the major indexes inched up by 0.10 and 0.08%. The session today could spring surprises. Macroeconomic data is more likely to complement the current economic picture than revise it. In the volatile trade today, the S&P is expected to trade indicated between 3,940 and 4,040. The benchmark stock indexes fell by more than 1% yesterday. The S&P logged the sharpest fall in the last 2 weeks. All 11 sectors in the S&P 500 closed in the red. The consumer goods sector declined at the most. Jerome Powell pushed investors to escape from risk. He stated that the Federal Reserve is ready to raise interest rate at a faster pace if incoming economic data signals the necessity for tighter measures to curb inflation. His remarks followed the recent reports that revealed a hotter-than-expected CPI in January and an unexpectedly robust employment growth. Traders revised their expectations of a rate hike by 50 basis points in March. Fed funds futures now indicate a 70% chance of this scenario compared to 31% on Monday. Meanwhile, yields of 2-year treasuries, that is the most accurate barometer of the short-term expectations for interest rates, surged to 5% for the first time since July 2007. Goldman Sachs upgraded its forecast of the ultimate size of the target range to 5.5% and 5.75%. JP Morgan noted that Powell stressed the totality of data which attach importance to the wage data and the CPI. BlackRock portfolios managers now predict that the official funds rate could reach as high as 6%. This is realistic scenario seemed fantastic a few months ago. As for corporate news, Ribbon Automotive shares slumped by 14.5% because the e-car manufacturer unveiled its plans to sell securities worth $1.3 billion. Tesla shares sank by 3% after CEO Elon Musk said at the investors' conference that they foresee a clear path to manufacturing cars of a smaller size. Fed Chairman Jerome Powell will testify for the second day tonight in the front of the House Financial Services Committee. Thomas Parkin will come up with his comments later. In his context, Wall Street is showing remarkable resilience. Though the major indexes dropped yesterday, they could have given a more painful response. Powell's stance on the tense labor market will be verified through the JOLTS report for January. The consensus suggests a considerable decrease in vacancies that could support the stock market. And today, Wall Street was spooked by a fresh employment data. The U.S. private sector unexpectedly created 242,000 jobs in February, much more than 119,000 jobs in January. The fresh reading greatly exceeds the forecast of 200,000 jobs. The good news is that the annual rate of wage growth dipped to 7.2% from 7.3%. Back to corporate news, Occidental Petroleum shares rose by 2.5% because Berkshire Hathaway, run by Warren Buffett, increased its stake in the oil giant to about 22%. WeWork shares jumped by 7%. The New York Times reported that the co-working giant is close to an agreement with SoftBank and others to restructure its unsettled debt of more than $3 billion and to attract extra funds. Importantly, the upcoming economic data will outline any corporate news in the nearest 3 days. The US dollar advanced to a 3-month high against major currencies. Its index consolidated at about 105.60 in the pre-market. The intraday corridor for the index is determined between 104.90 and 106.10, and Powell's speech drove the US dollar index up to the elevated levels of 2022 and worsened forex rates of other currencies. The Australian dollar incurred the sharpest losses. Reserve Bank of Australia's Governor Philip Lowe signaled the possibility of a suspense in the 10-month loan tightening campaign. Today, some major currencies stabilizing, but the current market is set to trade with a high volatility in the nearest days. The US dollar is propped up by the tailwind on the back of the hawkish Federal Reserve. The US dollar will stand tall until the US non-farm payrolls, which will be on the tap on Friday, and the CPI, which is due next week. The US currency could find support from leaders of the other central banks. Christine Lagarde and Tiff Macklem will speak later today. Softer rhetoric of other regulators will give the US dollar advantage to its rival currencies. The Canadian dollar went through a gloomy Tuesday. The firm US dollar weakened the loonie by more than 1%, and today the USD CAD pair is trading a bit lower at about 1.3748 within the intraday corridor between 1.3670 and 1.3820. The Canadian dollar tumbled to the weakest level in 4 months at 1.3766 against its American rival. The loonie is vulnerable today because the Bank of Canada is going to announce its policy decision. If the Bank of Canada puts the key interest rate on hold, the loonie will extend its weakness. The difference in interest rates between the United States and Canada puts the Canadian dollar under pressure. The regulator is widely expected to make a pause in the cycle of rate hikes. Meanwhile, the loonie is trading steadily like oil prices are. Brent futures are trading 0.2% down at $83.10 a barrel, and WTI futures slipped by 0.7%. Both benchmark rates sank by more than 3% on Tuesday. The risk of mood triggered sell-offs in the crypto market as well. Crypto traders are also alert to Powell's testimony. The hawkish rhetoric affected the digital assets, but Bitcoin is staying afloat. From now on, the market will be alert to the crucial non-farm payrolls and inflation data that will enable them to assess risks. Bitcoin dipped by 0.2% intraday to trade at $22,000. Ethereum, Solana, Ripple, and Litecoin are trading mixed. On the minus side, the prospects of aggressive tightening are bad for risk. On the plus side, crypto traders discovered the glimmer of hope. The Fed Chairman signaled that the central bank is unwilling to disrupt crypto innovations. But he warned that the crypto industry is full of fraud and risks. Powell also advocated for the Fed's involvement in the blockchain technology. Speaking of the technical picture, Bitcoin is showing strong resilience in the face of bad news. Despite recent dips, the token is consolidating in a narrow range between $22,000 and $22,500. If the price breaks any of the borders, significant moves will follow. Support and resistance remain at the same levels, $21,200 and $23,200. InstaForex team wishes you gainful trading and see you online tomorrow.